Guys, welcome back to this YouTube channel. This is the World Embassy FS, guys. So guys, as you can see on this episode, we're going to be talking on the gold USD. So we're going to move down to the monthly time frame to see the overall movement of the market. So guys, as you can see from the monthly time frame, the overall movement of the gold market is what bullish to the upside. You can see the great impulse to the upside. The market is bullish to the upside. So having that in mind, we're going to move to the weekly time frame. So from the weekly time frame perspective, we can clearly see that the market is trying to create a new all-time high, right? But there's something that we are seeing from this point here. The market is currently rejecting from this level here, which we are going to see that clearly from the daily time frame. So guys, let's move to the daily time frame. The gold is just straightforward, just too straightforward. So guys, from the daily time frame, you can currently see that the market is reacting to this level here. Let me show you guys. The market is currently reacting to this level, right? You can see that, right? Market is currently reacting to this level, and you can see the market has reacted there several times. Market gave us how many days? 1 2 3 4 5 6 good 6 days now. The market has been on this level, rejecting to the downside, rejecting to the downside. So guys, what is that trying to tell us? That the market is unable to break to the upside, right? So having that in mind, we're going to move down to the 4 hours time frame. But before we move to the 4 hours time frame, we're going to draw a fib retracement. We're going to draw a fib retracement to know this is an impulse to the upside. So we're going to be expecting a correction to the downside, because we'll see much more bullish movement to the upside. So let me draw the fib from here. So okay, so we are expecting that if the market did not take out this level, to the upside, come on guys, that if the market did not take out this level to the upside, if the market did not take out this level here to the upside, right? If the market did not take out the level to the upside, we're going to be expecting a kind of a retracement to this 0.50 fib retracement. So let me draw it very well. That's not accurate. Let me draw it very well. So if the market did not take out this level and this one, we're going to be expecting a pull down to this 0.50 and 0.38% retracement before we see another great pull to the upside. So these are going to be expecting from the BTC, from the USD, from the gold, guys, from the gold. So we're going to move down to the 4 hours time frame to see more light on that. So guys, you can see on the past week, and remember also last week on our previous analysis we did, when the market was around there, we said every reason why we're expecting the market to move to the upside to even get to this level here, right? We explained every reason why we're expecting the market to get to that level, but fortunately the market refused to break above this previous high. When the market was here, it rejected to the upside. So we started seeing that anytime the market gets here, it rejects to the downside. Anytime the market gets here, it rejects to the downside. Anytime the market got here, it rejects to the downside, which I also see the market is currently rejecting to the downside from this same level here. So guys, just as we've carried out in the daily time frame, I'm not going to advise you guys to start selling the US I don't know why I'm calling it USD card. I'm not going to start advising you guys to start selling the gold now, because on the overall movement the gold is still buying. So what I would just say, okay, let me take a fib. Remember, this is for the swing traders, So let me take a fib retracement from this level here to this level here, right guys? So what are we seeing? So we are expecting the market, and guys, you have to be very careful trading this gold as at this time, because if you can, as you can clearly see that the volatility in gold currently is very massive, and is not, it's very massive. It can clear out your whole account before you think. And if you're kind of person who's not a good risk taker, you're gonna cry and call for us a scam, because you don't understand the movement currently. If you should observe from this gold market, at some point the volatility is less, while at some point the volatility is very high. You can literally see that from the candle closing in different market movement, in different time when the market moved. So guys, we're expecting this market to get to this downside. As a day trader, you can day trade this from year to year, and you're going to make good money. Yeah, even as a swing trader, you can take it, but you need to pay attention to this level here before you start selling this trade to the downside. Right, the market, as the market has rejected here to the downside, we're going to be expecting a pull to this downside before we start seeing more buy to the what, upside. So guys, this is what I'm expecting this coming week on the gold. Let me place this here. Yes, no, to be okay here. Yeah, this is what I'm expecting this coming week on gold. Yeah, that's what I'm expecting. Let me draw that very well. That's what I'm expecting. That's if the market did not take out that level. So this is what I'm expecting from gold. So I'm expecting the market to get here, right, before we start seeing, I'm expecting the market to get here before we start seeing much more buying opportunities to the upside. But if it's a two-way thing, but if the market take out this level, this one, right, and we tested on it and continue taking out this level, you can buy from here and pay your TP here. That if the market take out this level, wait for, as a swing trader, for you to continue holding this trade, wait for a breakout of this. But if there's no breakout here, close. So if the market break out from this level, get here and retest, come back to retest here, take your buy position from here and observe this level very carefully, right? So if the market definitely break up, then you continue holding your buy position to the upside. So this is what I'm expecting from gold, but I won't advise this one, but I'm clearly much more in support of this, because remember, when these big banks and hedge funds, when they want to start taking their positions, they want to first clear liquidity. They want to first take people money before they'll start using it to trade the market to their own direction. And also, we can also put that or explain that from this standpoint of there are still much more buyers here than sellers. So when the market gets here, we're expecting a kind of a pull to the upside. So guys, for those of you who want to short gold, I'm going to just simply draw this trend line. Guys, I'm going to simply draw this trend line, but you have to be very careful. I'm going to simply draw this trend line. And also, you have to watch out for this level here. You're going to wait for the market to take out this level. Then, you're going to start selling. Once the market take out this level here, you're going to start selling to this point here. Can reach 150 pips. You start selling the market to this downside here. So guys, but you have to be very careful. I'm just for those of you who want to take that risk. So guys, that's all I have for you guys on the Xauusd, guys. And also don't forget this also the festive period. The market might not move exactly the way you expect it to move because of the festive period. So guys, make sure you are very patient. Wait for the market to fill your entry analysis or entry criteria before you take any trade. I love you guys. Trade safe and stay safe. And don't forget to go like don't forget to like, share and subscribe to this YouTube channel, and also go and watch the previous analysis for you to also understand, for you to be able to understand this analysis further. Is very important, guys. I love you guys. Stay safe and stay safe. Peace out.